All right, guys, welcome to your portfolio update for June. We're actually going to start doing these every single month for you guys, and I want to try to make them a little more interesting than what we currently do. We're normally doing these once a week, but I don't want to give you guys the impression that there's always something to look at once a week. There's like these tiny little changes. So we're going to do once a month. We'll talk about all the updates and more details as far as that goes. So if you're just joining us, this is your portfolio update for June. Also, performance has been updated on our website as well. So let's go through the portfolios real quick and get you guys off to your weekend. First, we've got the low volatility portfolio here. Here is the dark blue line is the performance of the fund. Here's the market up here. You can see the market's obviously aggressively pulling back and how the low volatility ETF portfolio sort of staves off that. The goal is very, very small and consistent returns. Nothing really changed here, actually. The volatility stayed absolutely the same. The S&P's speed and volatility picked up kind of significantly here in the last few days. But it was kind of a rough week, so that's to be expected for the S&P. If we go on to the medium-term conservative portfolio, the goal here is that slow and steady growth. We're on track for that. We don't want to take too much risk. You can see when the markets did sell off aggressively how little it affects the conservative portfolio. But of course, if the markets were to rally aggressively, you can see how this just slowly participates. Remember, we invest for speed here. We don't try to pick stocks. And so our goal is to make this move at a certain pace. You can compare the pace down here, moving at about 5.5 relative to the S&P, currently moving at 12.5 is where that's at, and kind of has been, give or take a little bit. So not too bad there. Slow and steady growth, on track, happy with that conservative portfolio if that's what you're in. If we go over to the moderate portfolio, this one really, you see the uptick towards the end of the week there with the markets. A lot of that was energy and oil. I don't know if you saw the rally in oil. On our daily video updates, we do that, which, by the way, I'm going to blow people away with that. The daily 4 o'clock updates, or 4:30 updates, are going to be just incredible. So you'll see. But otherwise, the moderate portfolio, energy and oil, and even the bounce in emerging markets helped us out this week. So that's why you kind of see this one doing a little bit better, although it's a moderate portfolio. Moving at about 8.5 relative to the speed of the markets at 12.5. We're happy with that. Now, I adjusted the dividend portfolio page here a little bit. You can see that the goal is not to keep pace with the markets, but I think we have one of the best dividend portfolios currently than we've ever had, going back now 10 plus years. I think this one's impressive. What we've done here is the speed of the portfolio is very close to the markets. Normally, you have to give that up in exchange for the dividends. So if you want to get a high package of dividends, then you're normally going to have very little growth in the form of your portfolio. We've managed to tweak this little by little. We've got a few more changes coming, but we've managed to speed this thing up within reason, but also get a dividend yield of 3.58% on our dividend portfolio relative to the S&P 500 only at 2. So you see how we've got the growth working for us, and we've got a greater dividend than what the S&P 500 can pull off. Really, really happy with this dividend fund. It's not for everybody, of course, if that's not where you're at in your life. But if this is the sort of dividend portfolio you're looking for, we got 100 stocks in there again, looking really good. Long-term aggressive ETF fund, performing right along as it should. ETFs, as far as the group, we're a little bit weak as far as going back this week, but very happy with the way we're moving. We're basically just comparing the speed to the markets, making our little tweaks here and there. Our goal is to slow the rate of the descent on the way down and hopefully participate on the way back up. I think the summertime is just going to continue to be choppy, so we'll see. Now, the aggressive stock fund, whenever the markets fall, you are going to beat the markets to the downside. That does slow down, by the way. But as far as speed-wise, we're moving right where we want to be. This one is only for those of you that want to be super aggressive. Look down here at the bottom. You're moving at about 1.5 times the speed of what the current, not 1.5 times, but 1.5% more than what the S&P 500 is currently moving at. That's our goal. And so keep in mind that when the markets do fall, you are going to see that speed up there. What we also do is when the markets fall, this doesn't count, this was a very small decline this week, but when the markets do fall, we actually speed the portfolio up. So right now we're happy with where it's at, but if the markets were to fall 10, 15% over some period like it did back in February, we actually ramp up the speed of the portfolio to take part in that discount. So we haven't done anything just yet, But pretty happy with it. Hey, by the way, if you're one of our customers, you haven't gotten our towel yet, that the markets, oh, that's upside down. The markets recover 100% of every decline 100% of the time. Sending these towels out to anybody, basically it was just starting with people that wanted them, and then once everybody sort of asks, if you want one, just send me an email. But once we get through that, then I'm just going to start blasting them out to people. So if you want one, let me know. Just a simple reminder to let you know, really doesn't matter what the markets do. As long as you're moving at the right speed, you're in the right hands, and we'll take it from there. Have a great weekend. We'll see you soon.